Morning, guys. It's Friday, March 28th, 5:29 a.m. Central Time. Grain markets are lower this morning. Wheat futures are sharply lower for some reason. Brian Split is here. Guys, we've got some soybean / TikTok news. Let's start there.
So, President Trump is considering lowering tariffs on China to help secure a TikTok agreement. A law signed by President Biden last year required TikTok's parent company, ByteDance, to sell its U.S. operations by January 19th. However, after taking office, Trump negotiated an extension of the deadline to April 5th to allow more time to secure a buyer. If a deal is not reached by that date, Trump has stated he will extend the deadline. Earlier this month, he reported that negotiations were underway with 4 potential buyers. Trump has already imposed a 20% tariff on Chinese imports and will announce reciprocal tariffs next week.
I was told, Brian, that soybeans rallied on this yesterday because it's seen as being some progress or kind of dovish sentiment out of the White House regarding China. Does that make any sense to you? Soybeans and TikTok go hand in hand?
I think it's a sentiment thing. Anything that suggests that the trade war with China could back down a little bit might be supportive to soybeans in general. But I think there was also an element of bean oil yesterday, and some of the conversation from the administration talking about, the renewable diesel guys and just overall the green energy coming from corn and soybeans need to get figured out. And so big energy and the renewable side needs to come together and put a plan together, and they'll approve that. So I think there was two elements of this, and that the soybean oil rally was the other part of it.
We've got a story on the biofuel stuff here in a second. There was a kind of conflicting headline that was out overnight. A Chinese official was discussing the trade war and grain import, soybeans in particular. He said this: if the trade situation remains unchanged by this year's U.S. soybean harvest season, it's possible that China's dependence on Brazilian soybeans could reach 80%. And he said that U.S. tariffs pose no threat to China's grain supply, which is probably true, but this is probably the direction that we're headed anyways.
Yeah, I mean, this is a thing that I think is easy to say when you have a large Brazilian crop like we do this year. If we had a problem with the Brazilian crop, if we had some production deficits, then this might be a statement they wouldn't make. But I think it's when you're going to see 170-ish million tons of soybeans, we could very easily see them have 80% of their needs covered by Brazil.
Okay, so the bean market did rally yesterday. It would look to me like this is, I don't know if I call it a breakout question mark. I mean, we took out some old trend lines here. Maybe it looks a little bit better.
Yeah, I would say for breakout, we definitely took out the downtrend, so that's positive. I think we have to start taking out some previous highs. So I would really look at that high that was made in mid-March as maybe a level that we have to push through. So again, it does look short-term positive. I wouldn't be surprised if we were right back down, trading just above $10 later today to finish up the week.
Yeah, we'll see what happens. And there's a big report, of course, on Monday. The corn chart, May corn futures are sitting on some key support very early this morning. How important is this old trend line that goes back to the August lows?
I would probably place the same importance on this trend line as I would that downtrend on beans. I'd like to see the trend line hold, but really it's important that we hold that early March low. If we take out, 441 and a half or 441 and a quarter on the May, was it maybe 442 and a quarter? I don't know, but sub 440, no good on May corn.
Here's wheat. I have no comment on this, but fresh lows and SRW futures this morning. I thought for sure there was going to be some headline this morning. I looked at the market and I said, there's got to be some Black Sea something somewhere. And I didn't see anything. Maybe I'm missing it, but it looks like technical selling. I don't know.
Yeah, so new contract lows in SRW. I will say that if you kind of drew a lower channel line from a lot of the lows going back to that August low and then those December and January lows, comes across that very early March low. And so we're right down at that lower channel line. Hopefully we can catch in this general vicinity. There is a good seasonal for wheat to go higher between basically late March and the earlier part of spring, and we'll start getting some more meaningful crop conditions overall for the winter wheat crop. But this market's definitely under some pretty severe pressure. And when we look at the HRW wheat, the KC variety, we've been in a big trading range where 550 to 650 is essentially the trading range. We're getting back down to the low end of the range on that crop as well.
I'm glad you had at least one nice thing to say about wheat with the seasonals. The narrative, which I believe is false, is that like we're going to start shipping a bunch more grain out of the Black Sea when the war ends, even though we've already been shipping more wheat out of the Black Sea, despite the fact that the war has been ongoing. I feel like a lot of the weakness, or at least some of it, has to do with the ceasefire talk, which I don't know that it makes a lot of sense to me.
Yeah, you and I think, talked about this almost 2 months ago, and
Yeah.
they're just the way that the war evolved and how things came to fruition over the last couple of years. The concern was we were losing a lot of production out of the Black Sea region, namely in Ukraine, because of the invasion. And I think that turned into a different story where Russia was essentially offering wheat at steep discounts so that they could continue to finance the war. So I think there's an element of that where if the war ends and Russia does not need to offer wheat in order to finance a continued conflict, that should have a general lifting effect to global wheat values.
What's going on in the wheat situation globally right now is that the US futures market does not jive with what's going on with the rest of the world. We're just as cheap, if not cheaper, than Russia on the export market now because the board has gotten so cheap. So I don't know if the board is mispriced. I don't know if we're supposed to be generating more export business, but that could very well be the result of this. Okay, we've got a big report on Monday. Let's go there.
We sure do. USDA will release its prospective plantings and quarterly grain stocks report on Monday. Traders expect a sharp rise in U.S. corn plantings versus last year, while a sharp decline in soybean plantings is expected. U.S. corn stocks as of March 1st are expected to be down 2.4% versus the same period last year. Soybean stocks are expected to be up 3%, while wheat stocks are slated to be up 11.6%.
Let's go back to acreage. So trade's looking for 94.4 in corn, 83.8 in soybeans. What say you, Brian Split?
So Ag Market has estimates, and our corn numbers are 95.39, and soybeans are 82.75. So we are in the camp of 95 plus. I think that's a lot to do with just the sheer economics of it, and then the continued conversation of not being able to make money planting soybeans at current price levels. We'll see. I think the market has definitely in the last week and a half or so priced in a pretty healthy number. I know you did a video on maybe what the whisper number might be, and I think we're pricing in something more than what the average trade guess is showing here.
When you guys do your estimates and you put them together, are you trying to guess what USDA is going to say, or you're trying to guess what is actually going to happen?
Yeah,
They may be two different things.
I think those are pretty close. I don't think the USDA is going to be too far off. Again, this is a survey-driven data event, so I think there's some real-world input to this, and it might change a little bit between this number and the June number, but this is what we think is going to happen, which we feel the USDA is going to be pretty close to this number.
With regard to grain stocks, there is some bearish sentiment out there on the corn number in particular. I think a lot of people think that feed demand is perhaps being overstated, and that maybe you'll see it reflected in the report on Monday, and that ultimately what you could see on the balance sheet, taking several steps forward, is that USDA could reduce its feed demand projection while at the same time increasing its export projection, leaving us with like an unchanged type carryout projection relative to, say, the 1.54 billion bushels that's out there right now. Any thoughts on that?
Yeah, it makes sense. I mean, there's a lot of talk, maybe back in January and February about how we should be feeding more wheat. We looked at, the values between wheat and corn, and we were at some rather significant levels where wheat looked really cheap.
Mm-hmm.
And so we probably did feed some more wheat, and then you just continue to look at the amount of cattle that are out there, and that would suggest that maybe we haven't been able to feed as much because there's not as many animals to consume corn.
Yeah. That could be keep in mind, guys, the acreage number is the big ticket item that everybody's going to look at first, but the stocks numbers can be just as surprising and have just as big if not a bigger impact. Okay, here's the biofuel story.
So, President Trump has directed the biofuel and oil industries to collaborate on U.S. biofuels policy. So far, 2 meetings have taken place, including one last week hosted by the American Petroleum Institute. Representatives at the meeting discussed future biofuel blending requirements, exemptions for small refiners, and biofuel tax policies. They also debated the future of the 45Z tax credit. Some supported keeping the tax credit, while others favored reinstating the previous flat $1 per gallon blender's credit. Both groups agreed to request that the EPA increase the renewable diesel and biodiesel mandate to a range of 4.75 billion and 5.5 billion gallons. Currently, the mandate sits at 3.35 billion gallons.
So this is seen as a positive, perhaps, Brian, because at least the White House is now acknowledging that biofuel policy or lack thereof exists, whereas we hadn't heard a damn thing.
Yeah, I mean, 45Z is something that the market's been waiting for, and I think this just gives it's another sentiment thing where it seems like we're closer to getting some actual guidance and getting something figured out. And once we know that, I think we can see in general the industry really move forward in ways that I think there's some uncomfort right now of going out and getting plants open to crush soybeans when we really don't know what the economic outlook is going to be for biofuels. And so having something that will eventually hopefully be set in stone will give us some policy that they can move forward with. So again, this just goes back to that bean oil rally yesterday where nearby was up about 150 points. And I think a lot of that was really based on this story right here.
Yeah, as of late, with regard to biofuels, we've heard more about divestment rather than investment because of the lack of policy. And maybe if the policy starts to move forward, you start to get back into that investment space and we can move forward with this. And eventually, I don't know how long it takes, get to a point where we're using a considerable amount more of feedstocks for biofuels.
USDA released weekly drought monitor data yesterday. A large portion of the Corn Belt received both snow and rain last week, leading to improved drought conditions in Iowa, Minnesota, Michigan, Wisconsin, Illinois, and Ohio. Meanwhile, conditions deteriorated down in Missouri. In the High Plains, snowfall across eastern Nebraska contributed to improved drought conditions. However, the remainder of the region experienced predominantly dry weather, leading to worsening conditions in South Dakota, Kansas, and Oklahoma. When we look at the percentage of U.S. areas experiencing drought, corn country 44%, soybeans 36%, winter wheat 38%, spring wheat 39%, and cattle country 45%.
So you've still got this drought that's in Texas and in the Southwest. And some people will say that that could be a precursor to something that could perhaps happen in the Midwest. I don't know.
That's my understanding. So, we could see some alleviation of the drought in the actual Midwest, and maybe that takes a little bit of risk premium out of the market in the short term. But I think the long-term pattern and the potential for a hot and dry summer really does lie with what's going on in Texas and the continued building of drought into Oklahoma. If we continue to see that Texas drought move north and we see a dome develop, in that vicinity, then I think that is the general pattern that the weather guys that at least I listen to are looking for to evolve into a problem coming into summertime. So maybe not so much, what's going on in Iowa, Illinois, and Indiana right now. It's all about what's going on and how that evolves coming out of the South.
The amount of U.S. corn areas experiencing a drought went from, I think, 53% down to 44 last week, which is a substantial move. And if you look at it on a map, I mean, there's a lot of the central corn belt that doesn't really have much drought. It's a lot of the far western areas, and you've got a patch in central Illinois and Indiana and some other places. USDA had 2 versions of this out yesterday. Just something that I thought was interesting. Mackenzie, I was looking at what you wrote this morning, and you're like, okay, 44% of corn areas experiencing drought. And I went to the website to pull this map, and then I found this 16% of corn production. There's 2 different maps. They're the same map as of March 25th. And I was like, WTF is this? I mean, questionable data out of USDA. What else is new, right? I don't know. They have some glitch on their website. Anyways.
So U.S. corn export sales declined last week. Net corn sales were reported at 41 million bushels. The print was down 31% compared to the previous week, but unchanged from the prior 4-week average. Japan was the largest corn buyer for the week. Net soybean sales were near the lower end of pre-report expectations at 12 million bushels. The print was down 4% from the previous week and 28% from the prior 4-week average. Mexico was the largest buyer. Net wheat sales were also near the lower end of expectations at 4 million bushels. The print was down noticeably from the previous week and down 65% from the prior 4-week average. Japan was the largest wheat buyer for the week.
I don't really have anything bad to say here. U.S. corn is still competitive. We talked earlier in the week about how the situation in Brazil is very tight with regard to corn and that they may have actually bought some corn out of the United States. Wheat is competitive. U.S. wheat's competitive on the export market, from what I understand. Soybeans, not super competitive versus Brazil, but not terrible either. And we haven't seen China cancel any beans yet.
No, we haven't seen cancellations. When you look at the corn number, again, I think most weeks, if you're over 1 million tons, then that's a positive week. We mentioned that the export pace right now would suggest that the USDA at some point should increase corn for export. Interesting, Mexico is in buying beans, and again, they're not set up to take soybeans in from Brazil. It's a lot easier to get product from the U.S. And like you said, wheat's competitive. Apparently, back to USDA misdirection, you looked at that map, and I just think it was funny. We were doing a video and we talked about Panama buying a bunch of wheat, and then turned out they didn't actually do that. USDA had corrected that. So that was another one of those USDA false data sets.
I don't know what was going on with the drought monitor stuff. Like that 16% corn number was in like 3 different places on the website. So they got some sort of glitch. What did cattle do yesterday?
Cattle futures were higher once again. Live cattle were 102 to 277 higher. Feeders saw gains ranging from 85 cents up to $1.85. Box beef was mixed. Choice was down 258 at 335.72, and select was up 291 at 319.44.
Are you a cattle bull, Brian?
I mean, it's hard not to be. I think we looked at some charts with Mackenzie yesterday for the premium, and we looked at some of the kind of the bigger picture, longer term chart developments. So it looks positive. It looks like some of these deferred contracts really broke out to the upside. Some of the things I'm a little bit concerned about, back to China, we've just seen China absent for beef exports the last couple of weeks. And I think they're the number 3 buyer of U.S. beef. So if that's something that continues, we just have to really be mindful that we are at some pretty nosebleed levels, and we are just susceptible to some pretty major corrections at any given time. But it just seems like that fundamental story out there is still what's driving it, and is going to continue to be there where the funds buy dips. But these corrections can be pretty nasty.
Outside market's pretty quiet this morning, guys. Brian, thanks for joining us. Everybody have a wonderful weekend. We will be back on Monday.